YouTube. This is the Working Investor. As you know, I have this goal of trying to achieve at least $1,000 a month every single month in selling options, primarily the wheel strategy with selling calls and selling puts, or should I say, first selling puts, eventually getting assigned, then selling calls. Only in companies that I am extremely bullish with. I have made the mistake in the past of going after premium with hype or speculation companies, and I've gotten burnt when the market went down. And also companies that you 100% have a strong conviction in, if you see the market going against you, you won't get emotional because a lot of it is emotion as well. But if these are companies that you are really bullish in, you can sleep well at night and rest assured that you have a good investment underlying. So Apple is one of the companies that I do like. I do not like their brand, but I know that it's very popular. And the problem is that the implied volatility is pretty low in Apple. And I've been having a really hard time finding a good goal of having my 12 to 18% annualized return with a good delta. For example, if you go to the sell Apple put of June 7, the only thing that actually really makes sense is barely the 190 put, but that's like right at the money, and it's a 0.37 delta, which is not what I usually go for in a cash secure put. I was very tempted to go for the close to the money or at the money deltas, but it's still too close. I was looking into the 187.5 put, but if you do the math, and I could show you the math under it, it's still not. It was barely 12%, and ideally, I'm trying to hit 18 if I can. So I thought to myself, if Apple is really, really cheap when it comes to premium, because implied volatility, as you can see here, implied volatility is 18.08%, which is pretty low. Why not buy option? Because if options are cheap when it comes to premium, buy. Although what I was thinking about was if you want to buy a LEAP option and control 100 shares of the underlying for a fraction of the cost, wouldn't it make more sense to buy when the market's low? I was thinking about that, but when the market is falling, then implied volatility goes up. And also, I'm going out to December 18, 2026. And I have done this. I bought the one, I bought a call. I'm on the put side. So I bought a call, the 160 call. It's already up. I bought it for $57.40. If you multiply that by 100 shares, it's $5,740, which I put out. It takes a lot to put out that kind of cheddar, and knowing that it could all become decayed under theta decay. But there is a mix of intrinsic value and extrinsic value. The intrinsic value is that it's deep in the money. It's a 0.82 delta. So for every dollar move the stock makes, I make about 80 cents on the dollar. And it's deep in the money because you could see on the top here that Apple's trading for 191.65 and this is 160. So it's at least $31.67 in the money. When I put on the trade, it was trading at about 191.20. So I do have $31 of intrinsic value, but I do have some extrinsic value. I looked at my break-even cost, which would be $217.40. So I'm pretty much betting then the next 900 plus days, and I could show you the breakdown right over here. If you look at this area where I'm going to highlight yellow, so this is a trade that I put on 5/20/2024. It expires 12/18/2026. 942 days in the trade. So 365 days in the year. Over close to 3 years, I'm betting that Apple, which was trading at 191.2, would beat at least 217.4, which is a pretty not such a bad bet, because if you do 217.4 subtract the current price of 191 point, let's say 6, $25.08. Let's say divided by roughly 3 years. So I'm betting that Apple's going to go up at least $8.60 a year to break even, which seems like a very possible goal. Past performance is not indicative of future results, but past performance is the best predictor we have for future results. But again, I'm not a financial advisor, and also there could be always swan events, geopolitics, who knows what, etc. But this is a risk that you take, and you get paid for your risk. So yes, I did buy a Leap on Apple. What deterred me, one of the things I heard about, like from the Tasty trade, was, and I'm a big fan of Tasty Live, Tasty Trade, whatever name they call themselves. I believe it was Tom Sosno that said that he's not. It's not in the Tasty mechanics to buy options, but I have bought in a call on Apple during the pandemic, and I actually did pretty well on it. One of my best trades, multiple $1,000s in return. So I'm going to do it again. I think it's the right choice. I did see from Trade with Dave, I believe, that he made about 6 figures just trading 6 calls in QQQ and 1 long call. When I say calls, I mean like Leap in Facebook, and already P&L for the year is 6 figures. So basically, you really get a lot of leverage, because I right now only have to put up $5,740, and I control 100 shares of Apple, which is trading for, if to buy 100 shares would have been $19,120. So I basically have a 3x leverage in my capital to control 100 shares of Apple for every dollar goes up. And also, I don't have to wait until if I see it's up even like $10, I can just get out of it and make this into a shorter trade. So you have the choice of how long you want to be in it and when you want to cut profits. But this is a trade that I've done so far. But this digresses from my monthly goal, and I have not given up on the monthly goal. So these options right here are placed for I'm going to highlight them in yellow. These are placed for my June expiration. So like I said, for May, I've already hit the goal, and I'll make a video when May is over about how much I've earned. But so far, these are options: Amazon, S&P 500, which is a roll, Google, and I actually did put on a TQQQ because I have a love-hate relationship with TQQQ. So far, and my deltas are 0.3, 0.8. Yes, I went 0.3 in Amazon. I'm extremely bullish in Amazon. I believe that they're a very diversified company in a lot of different areas. And but I did a 0.8, and that was a SPY. It was a roll, so disregard. That's not usually my delta. I did a 0.3 in Google. I'm very bullish in Google. It's so far doing very well. And I have this TQQQ 0.24 cash secure put I put on today. So for June, what I have so far, even if let's say if you want to round it down, I may cut it a little earlier, at least 200, at least let's say 250, at least 200. So I have roughly around at least $700 already put on for the month of June. I still have to put on another trade or two to get that to $8,000. So I still have that initial goal of the $1,000 per month. And this here is a side venture due to frustration, I guess, because premium is not generous enough to sell. So I decided, if I can't sell premium, let me buy premium. And that's the reason why I did it. What do you guys think? Working Investor over and out.